Navigating the Bear Market Power Charting Special Edition. I'm your host, Bruce Fraser. Thank you for being here. Very important topic today. We are effectively going to talk about the anatomy of a bear market. Let's get to it, but there's additional resources here. You can watch Power Charting on StockCharts TV, read my blog at StockCharts.com, and then Wyckoff Educational, Roman Bogomazov at WyckofFanalytics.com has a Wyckoff trading course, part 1, new cycle coming up in April. Check it out, it's awesome. With this, we have the classic stock market cycle, which mirrors the business cycle: accumulation, markup, distribution, markdown. We are going to focus here on the attributes of the markdown phase. It's unique from any other phase in the stock market. Supply is greater than demand. Stock is for sale. The acceleration and the volatility in the decline is unprecedented. Well, we have a way to measure that here. We're looking at average true range and the VIX volatility index. As an example, you can see back here in January, February of 2018 that the average true range spiked up, became quite high, so did the VIX. And then in the October to December decline, you can see the acceleration of prices lower into a climax, and the average true range and the VIX were again spiking upward. Well, here we can see at the moment that the average true range and the VIX are a magnitude larger than they were back then, as this market has an unprecedented waterfall decline. This is a markdown, this is a bear market. There is increasing and intense volatility on the way down. This reminds us of the old Wall Street adage, don't attempt to catch a falling knife. What that refers to is that the volatility on the way down in a bear market becomes ever greater as it crescendos into a selling climax. We don't know where a selling climax is going to end. We can only tell that in the aftermath, after you have the crescendo of the panic of selling into the lows, and then a sharp reversal, which is called an automatic rally. It's quite a dramatic reversal from the selling climax exhaustion into a bounce, but that bounce is short-lived and puts us into a trading range. The trading range is very volatile, and it can go on for a period of time. The thing is, if it's going to be accumulation, which is a cause-building process for a markup, the volatility will come out of the accumulation range. So the volatility will be high early, and then it will diminish over time because stock is being absorbed. The counsel, the Wyckoffian counsel, is to wait for the completion of accumulation and then participate in the new emerging uptrend that comes in the aftermath of this. This could be a number of months away. So we can see here that in this accumulation schematic that the volatility is quite high, and then volatility diminishes throughout as stock is being absorbed by strong hands, and then a new condition, which is an uptrend or a markup phase, follows. And the thing is that as of this time, we do not know if what we are going to have after the selling climax is accumulation or redistribution. We don't need to know. All we need to do is just to be good Wyckoffian tape readers, follow the cues on the charts, the phases of accumulation or redistribution, and then watch for those conditions to be completed. Here is an example. This is the 58 to 63 period, which looks eerily like the present market environment. Well, a cause was built here. This is the current, the recent market. A cause was built here. A cause was built here and here, and then a beautiful cause was built, which produced a big uptrend in 1962. And so here we can look for the possibility of that happening, but we don't know yet. We don't know how far down this market's going to go and then what kind of a cause it's going to build. And so we're just going to follow the cues of the charts and using our Wyckoffian methodology to determine when and where this market is ready to begin a new uptrend. And with that, I thank you for being here.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.